and then Rushil will take it from there.
Jai Jinendra, Murekiya, Sunday morning, afternoon, jate jate bhi ayo. Au Mahendra Maru Gam Bidra. I have pleasure of introducing Rushil Dedia. Rushil, I have known him since his IPO, his initial public offering from his birth. And, I have a pleasure of seeing him grow all these years into a wonderful man. And his father and mother, they are close friend of ours. He's from Gam Gadsisa, currently lives in Mumbai. He's a associate partner in a financial firm with about 8 years of experience in wealth management and asset allocation for individuals and corporate clients. He has done electronic engineering and later on completed masters in international business in the US. He's a avid investor himself, and he is always eager to learn about new businesses and new opportunities. Having worked in the corporate sector earlier, he understands the lack of wealth management at the corporate level as well as at individual level, and which makes him more prudent financial advisor. And today is going to give us idea about how NRIs sitting in the US can invest in India without a lot of hassle that you have to go through. So I'll hand it over to Rushil. Welcome, Rushil.
Hi, thank you. I hope I'm audible, first of all. And thanks for that introduction. Thank you, Priyank, and thank you, Mandra uncle. Uh, well, good morning, good afternoon, and good evening if you're in India by any chance, like somebody like me. Now, I I'm just trying to try and pull up my screen. So just give me 5 seconds. Hopefully, it should be up. I hope you guys can see this.
Yes.
Okay, perfect. So I hope you can see the first screen. Just sorry, just 1 second. Okay, little bit of yeah. So I'm just going to quickly dive into it. I know Sunday morning, it's probably not the most ideal time to discuss finances and investing and all that. But thanks a lot for anyway joining in. I'll try and keep it very crisp and very to the point. This is what I'd done in my recent trip to the US right now. We actually did a lot of work to find out the data that I'm about to show you, and it's something which everybody will understand. I will try and keep it very straightforward. There's not going to be too much of financial jargon or anything. The whole idea was, of course, people have, already some experiences. They have some thoughts about investing in India. Some of you all are already doing it, I'm sure. But there are certain misconceptions that are out there. There are certain factual data which even I was surprised when we were compiling this. Uh, you know, and I was wondering why did I not come across this before, despite being in the industry, things like that. So me and along with my sister Harini and her team, when we put along all this data, and it took a good few weeks to put this up. Almost about 5.5 or 6 weeks. We ourselves were surprised, but I hope we try and only put the relevant data out there out of the entire glossary that we had. Uh, and hopefully this will give you a good reason to even consider India if you have not, and if you're already doing Indian investing in India, then maybe do a reasonable amount of your overall allocation. That's that. And I'll also try and cover what are the best ways now to invest in India, especially with what has happened in the last 5 years with the developments and certain economic pushes that the government has given via policies. Maybe if the traditional route doesn't suit you, there are now newer ways to invest. So let's just quickly get into this. And I think at the end, we'll obviously have some Q&A. I'll be happy to take questions at the end. And if you have anything else, I'm sure you can, questions in the middle, you can obviously post it on the chat here, and I'll take it once I take a break from my explanation. So why invest in India? That's the whole crux of the discussion. everybody, you guys obviously know you all are living in the US, right? has been a proven wealth creator. The S&P 500, which is the default US uh, indicator or stock indicator, has obviously done well over multiple years. Now, in reality, US and India have a very similar fabric, right? Both are largely dependent on domestic consumption. Both are vibrant democracies in their own right. And they've been generally peaceful. Of course, there's no perfect democracy. There are obviously problems, but uh, India, particularly over the last 20 years, have had stable governments. There have been changes in the regimes, of course, but largely there's never been any in any situation where the government tenure has been cut short or a coup, which has happened with a lot of other countries across the world. Uh, and there's a big participation from domestic investors into India, and and over the years there's been consistent growth in the macroeconomy of both countries. Of course, US being a developed economy has obviously it has a decades ahead of India in terms of a lot of the development that we see. But in terms of consistency of growth, I think both are fairly there. So just put it that into number, I think unlike a lot of other major economies across the world, both have are dependent on their domestic consumption, which is by people like you and me, and that dependency is about more than 60% in each of the case, which means, uh, you know, this just shows the inherent strength of the economy because it's not fully dependent on outsiders or global, changes. Of course, everybody gets affected by it, but they are largely insulated to an extent because of the private consumption that is out there in both these countries. So, here's we just pulled out certain data just to show you. You don't have to deep dive and see every single country. I think just see by seeing the columns that you see on your screen, you will just be able to see and appreciate as to how consistent the growth has been in India, right? It's always been the nominal GDP has always been in the range of eight somewhere between 8 to 12% all through, and this is for decades now together. So it's not like in cases where the economies like a Brazil, for example, or some other places where they are highly dependent on one particular type of industry, like a commodity industry there, for example, or a mining industry in South Africa. India has been the the GDP growth has largely been due to participation of all types of sectors and all types of companies in India. Of course, some do well in some years, some don't do well in some years, and in fact, even decades. We had the IT boom, which happened after 2000. In India, healthcare has been a consistent performer. Banking and private consumer companies have also been right up there. So there are always these batches of companies, and even within the sectors, which have in in India, which have really pulled the economy and have delivered strong economic growth. So the consistency is right up there in terms of nominal GDP growth, and what does this mean ultimately? Basically, that means that the economy is always moving, right? Somebody is always pushing the vehicle ahead, which also means that there is a good return of capital. So let me just move to the next one, Rahul. So in terms of similarity, or in terms of differences, rather, in between both the countries, the return of equity that you see, this is the chart which shows you. So return of equity, I'm sure a lot of you guys know, but for the benefit of everybody, it's the बनिया metric. It's as simple as that. धंधे में हमने कितना पैसा डाला और उसका क्या आउटपुट आया. That's really it. So that is the simplest explanation of ROE which anybody can give you, which means how much of the shareholder equity is deployed in any business and what is the return on that. And the consistency of ROE will obviously determine the long-term earnings of that company and of the sector, and obviously for the index in the country at the end. So if you see in the slide, India has a very high percentage of companies which are delivering north of 20% return on equity, which means the amount, if you're putting 100 rupees in a business, every year on year, the return of that business is about 20 rupees, something like that, just to give you a very simplified explanation to this. And that number is significantly higher, right? We are almost on par with the US, which has been the flagship of all equity investing all across the world. Of course, the US benefits a lot by size, there's no doubt. Uh, but this makes this is just to prove a point that, there are great businesses in India, businesses worth considering to invest in India, and anything that you want to, even before you start going down the research ladder and kind of figuring out what to invest in, everybody in the financial world looks for few financial metrics, and one of the main metrics is this, the ROE, which is the holy grail of any investing. So the whole point of putting this slide was just to tell you that India should not just be something that only if you travel there or if you know somebody there you do. It should be a part of your structural bet, irrespective. It is not just a simple tactical bet. And obviously, there will be more slides which will try and emphasize on this. Uh, but when you have a strong profile of companies having a return of net worth, a return of equity of about 20% for a long period of time, and this is all 10-year data that I'm showing you, it is not 1 year and 5 year and all that. It means that there's something which is going right, for the businesses in India. There's something that the entrepreneurs are doing right over. So, so this is a slide which I think will matter to all of you guys the most. We've obviously shown you that this is the data for all the leading indices in dollar terms again. So I've converted all of this to USD. Of course, most of the countries or currencies have actually seen the depreciation. Uh, India obviously is one of them, and despite that, India has actually been one of the best performers of the stock market in general, as a whole, as a representation that you see in front of you, uh, over 5 years and over 10 years both. So. Uh, over a 5 year period, in fact, it's actually beaten the US, even in dollar terms. But I think 5 years is also coming with the hindsight benefit that we just passed through the COVID low, if you remember, in 2020, about 5 years ago. So I would say look at something which is 10 years, which is much more relevant. That data that is much more right up there. So it's been the second best stock market to invest in the world after the US, even in dollar terms. And so a lot of times, I think the common question which I've always come across is that, whenever I put money in India, I've always lost money because there's obviously a currency loss. There are, forex markups and bank charges, which is why I've never ended up making any money. But the data shows something else, right? Even if you put the money in a normal index in India, even in dollar terms, after the depreciation of dollar over 10 years, if I remember correctly, 2015, the dollar was 67 or something, and today it is say 85 odd. Even after the loss of rupee against the dollar, we are still the second best country to be invested in. So that's the kind of potential that India holds. So to take a break from just numbers and data, just to quickly show you who are the world leaders in India. So I'm sure you guys would have heard some of these names. Maybe you guys are aware or work in the industry. India also has global leaders in terms of their own in terms of the sector representation, and like you see in front of you. And just see the names. You might have heard of some of these names, and just see the columns on the right side. There are at least the last four ones, right? And how they've really gone about their performance over a long period of right. So what you see in front of you is ROE again. That is the Banya metric, return on equity. To the right is EPS, which is earnings per share for everybody's benefit. Mind you, CAGR, what you see is compounded annualized growth rate, which means on an average every single year, what has been the growth of that particular company's earnings. So I've just mapped uh, sector-wise India leader and the global leader, and what the India leader has done versus the global leader. Right? And of course, there is a big difference in size. We are not trying to compare them on the size of the company, but we are just trying to compare them on what the company has done, how have they delivered, right? Always keep in mind the Banya metric, what is the meaning of it? Return of equity, when you always talk about, is actually money invested in the business and the output of that business, right? Which means what? Ultimately, if it is 20% or 15%, which means ultimately that translates to earnings, or that translates to profitability of the company. Now, earnings per share that you see, EPS, that is exactly that, right? So what our ROE has done is reflected on the column of the EPS, right? If you see in front of you. Uh, So the EPS growth has been phenomenal. They've all been pretty much in double digits, pretty much, except for one or two companies, of course. And these companies are usually the ones which are commodities or something. So they obviously have longer cycles uh, of going through a bull and a bear phase. So I think this should be proof enough for anybody who asks, does India even produce world-leading companies or high-quality companies? And they've, in a lot of cases, they've actually outperformed the global leader or the like-to-like leader in the US or elsewhere. So this is just to show you some hand-picked data as to why India should be considered as a structural option, And I'm at no point suggesting or saying that you have to sell US or sell anything else that you've invested in and come to India. India should just be a part of the overall basket. That's all. It could be a part of your fresh allocation in most cases, or if you're over allocated somewhere, maybe you can take the money off there, and come here. But that's obviously subject to each person's individual investment plan. You can consult your respective advisors or your family members or well wishers for that. But I think India's for sure something is going through a great uh, rise in terms of the development that we've seen. What we've seen, and just to give you a simple anecdote, I remember we took about since 1947 when India got independence, to reach $1 trillion of economy. I think we took about 67 or 68 years. I think in 2006 is when we reached there. 2016 we became a $2 trillion economy, right? So what we did in the first 60s, whatever 68 odd years, we ended up doing that literally in the next 10 years. The next trillion, which is, we became a $3 trillion economy, really in, I think, about 2000, if I'm not wrong, it was 2020 or 21. I mean, if you adjust for that COVID loss, uh, again, the timeline has shortened it. Another 7 years, another trillion. So, and we are heading towards a 5 trillion, benchmark pretty soon, right? Which ultimately means that there's obviously somebody's creating, making goods, somebody's exporting, somebody's giving out services, whatever it is, right? Ultimately, there's economic activity, which means there are companies which are doing this ultimately. And if you pick hold of the right companies who are growing, and if you get them at a good cost, I think there's great money to be made, which goes for any kind of investing really. But all I'm saying is to consider to all the last 4 slides that I showed you was just handpicked data to tell you that India should be a part of the overall allocation. Maybe if you have $100 net worth in equity, I think it is worthwhile to consider having at least $3 or $4 in India to begin with, and do a reasonable allocation to start with, because I think that's what it is. And I mean, I'm not even going into the stories of the economic growth. We are at, say, a 2,500 or 2,600 per income capita today. What we are exactly what China was at 1990, and then the kind of jump that they saw in the hockey stick level in terms of per income capita. I'm not even going into that as to how many cars per kilometer India has versus the US or versus the China, or in terms of travel or in terms of consumption of apparels or whatever it is. There's so many such stories, but I think those are ultimately stories. I wanted to show you what will actually translate to for you to make money at the end of the day. So, are there companies, does the data show that Indian businesses are high quality businesses? Can you even consider them? So, I think rather than just putting it into a story form, if I show you something like this, the ROE number, the EPS numbers, I think that is far more worthwhile. So, so now that I've at least broadly established as to why even consider India as a small allocation for investors and NRI sitting in the US, how does one go about investing in India, right? Right? How does one invest in India, right? Now that you want to do it. So my simple answer is active funds. Now, there's a reason why I've picked active funds, and it does not mean that I will active is better and passive is bad, or vice versa. But the reason why I feel active funds will do well is what I'll try to show you. So,
Hey, Rishil, sorry
yeah.
to interrupt. Could you either go in presentation mode for slide or zoom in? That's a request from some of the participants.
Yeah,
And
sure.
then I
Let
think
me
you
just
have some annotation lines which have come up if you want to clear those red lines.
let me just reshare this. It'll be easier. Hold up. Just give me a few seconds. Is this better? I think the lines are gone, right?
Yeah. Lines are gone. View is still same. It's not the presentation view.
Okay.
We can see.
Let me just see if I can find a way to.
Or you can just zoom in to the content.
Okay, yes. Can you see this better now?
Yeah. Thank you.
Okay, great. So I was coming to how to play India, right? How does one consider India? Now I mentioned active funds, and here comes the reasoning for that. So the screen that you see in front of you, I think is one of the most important screens, and we took some time into getting all this data ready. Uh, Now the data that you see in front of you is obviously data for the last 10 years. It's not a short-term data by any means. And we've considered all the best options to invest in as far as equity investing is concerned, all across the world. India's got the highest number of stocks which have delivered north of 20% returns over 10 years consistently. So just 20% CAGR for every single year for the last 10 years, right? It's even better than US, which comes to a surprise to most people, of course, but this is the reality of it. Uh, and the whole, and I have also data across other timelines as well. So I have something for 20 years, for example. So, and to break it down, uh, over 20 years, uh, companies which have delivered north of 20%, the stocks which have delivered, which are basically companies or businesses which have delivered 20% return year on year, uh, in India, there were 155 such companies. Okay. Versus the US for 20 years, that number is about 35. And for China, that's about 5. And for Japan, it's about what, 2 companies, if I'm not wrong. Yeah. So very, very small number as we go down the ladder, right? So, and so 14% it's a very high amount of, and this is for the entire universe of considered universe, as you can see in the caption mentioned below. And this is again in USD, right? These are not rupee numbers at all. We've obviously curated the presentation so that it is relevant for everybody in the US to understand this. So India uh, has a lot of great companies and a lot of great businesses to consider from within, because 14% it's almost unheard of, to have such a large amount of money. And especially coming from the last 10 years and going into the next decade, I think there will be even better opportunities. A lot of you, if you're traveling to India or if you are in touch with your folks back home, you will be hearing about the kind of developments that are going on in India, the kind of government thrust, the kind of infrastructure projects, the kind of healthcare investments, the kind of leap that we've taken, especially in electronics and semiconductor manufacturing, where we were almost zero, right? I think, and I'll come to some of these examples maybe later on, but I think the way things are, I think there'll be even better businesses coming forward in the next 10 years. It's up to us, and it's up to all of us in general as to decide as to whether this makes sense for you as an investment. But I think India has a tremendous amount of potential to offer coming forward. Now, here's the difference between the US stock market and the Indian stock market. So very quickly, uh, US, the S&P 500, which is the flagship, index of the US, pretty much all of the returns have come from majorly the top half, and post maybe if you break it down, it's literally the top 20 companies which drive the large part of the index, and particularly the tech sector, which has driven all the growth. Of course, there are outliers. There are certain banks, some consumer names, etc. But in general, the tech sector, the Magnificent Seven is what everybody calls it. right, starting from the Apples and the Amazons of the world. They've been the ones who pulled the entire index out. So that's why US has seen most of the growth coming from large cap names, whereas in India, it's quite diversified. There has been year where even large cap companies have done well, but it's the small and the mid caps actually which have really propelled, put their foot on the accelerator and delivered tremendous growth, right? And I think that's where the real story of wealth creation lies in India. This does not mean the large caps do not make wealth or anything like that. It's just that if you're present in these sunshine sectors or in these new sectors or in these new companies or disruptive companies that are coming out of India, and they are not disruptive only in technology or anything, they could be in a lot of other ways in terms of the quality of service, in terms of arbitrage of cost, or whatever it may be. But I think the real growth lies there. So I think that's where I feel, as an equity investor myself, that one has to really put their focus on. And as you can see, the other difference in the US, the tech is the one which has dominated over the last 10 years. But in India, the equity returns have actually come from all sets of companies, right? So you have financials or banking and non-banking companies, insurances, etc., which have done well. In certain times, healthcare, which has done really well. And healthcare includes everything. It includes pharmaceuticals, it includes uh, healthcare devices, it includes hospitals, diagnostics, etc. Right. So we've got growth coming in from all these kind of sectors. And so, like you can see, it's not dependent on one sector. There is always a time if one doesn't do well, the other one will pick it up. And if two don't do well, the third one will pick it up, things like that. So it is much more diversified and much less reliant on any one sector, which is the big differentiation for a Nifty 50 or a Nifty 500 versus an S&P 500 or a Nasdaq equivalent sector, however you want to compare it. With the dependency is far less on any one sector, and winners can emerge from any market cap, from any sector. Sorry, just let me. Right. So the one question that everybody ends up having is obviously it's with regards to your currency, right? Is it now worth taking the currency risk now that we've established, okay, India karna hai, maybe we have to go and invest all across the board, not just in large caps or mid and small caps. But so let me break one more myth that people have. Okay, rupees though depreciates a lot, it always keeps going down, etc. Rupees actually been one of the most stable currencies compared to any other emerging market currency out there. So as you can see, over a 5 or a 10-year period, the average depreciation is about 3%. So, and which is a given. And I feel, unfortunately, there's something which is beyond anybody's control. I wish I can give you theories about why rupee will not go down as much any going forward. Why, with tariffs and with the third front becoming stronger, or China starting to become the next global power in the making, or a lot of the trades between larger countries are now starting to happen in other currencies or alternate currencies, to the fact that a lot of the central banks, for example, have sold the US bonds in general and have started holding gold. Many, many theories, de-dollarization. And I don't even know how far this will go through, whether in the next 10 years, how much of it will actually fructify or not fructify. Obviously, there are forces in motion to make sure that dollar loses its international currency status. And if you've seen this, I think there was a Ray Dalio paper which had come up. If anybody's in the industry, every 70 years there is a change. I think prior to 70 years from now, before dollar became the global currency, it was just pound which was the global currency. And of course, after that, with the World War and the change in order, it went to dollar. So I don't know. And apparently now it's already been 70 years since. So maybe the time for change has come. I have no answers for this. I don't think anybody has any clear answer for this today. Uh, what I can tell you is, with everything which has worked against the currency, especially the rupee, it's still been one of the most stable ones. RBI has about $650 billion of reserves, so they try and make sure that the rupee doesn't get destabilized beyond a point. We have one of the highest reserves in the world in terms of forex reserves, which is India. So I think to that extent, they try and manage the interim shocks, if there are any. But all said and done, there is nobody who can predict this, I think. So all you can do is take a conservative call today and just think that जो पहले हुआ वैसे होता रहेगा. So if you think 2.5 or 3% is the norm, one should assume. Let's assume that continues, because that's the only simple takeaway that one can have. And I'm saying even despite that, India still has made a mark, and as the data has shown you earlier, that it's still a valid consideration to invest in, despite the dollar problem or the dollar appreciation threat that it has, which may be, for all we know, this the next decade it might not be the same. It might not be 3%. It could be 1%. But I don't have an answer for that today. So, but I think it's still a risk worth taking. So coming back to the whole point, so why do India, after taking the currency risk and everything, like I was showing you, it's also because India has been the best market or in the 5-year period, and the second best over a 10-year period. It has just been after the second best after US. And thankfully, and in US, what has happened is the entire tech sector boom has just pulled the entire index one way. And of course, these tech companies have disrupted and brought in a lot of revenue and amazing profitability and everything. But it's again that one sector, which is why the blue line, the light blue line of USA has actually been very high. But India, even though they do not have any world-leading sector or any companies of that nature, it's over a diversified group of sectors and companies has still been number two, which I think is a very significant feat. So hopefully these bunch of slides will showcase to you why India should be considered, and with very precise points. These are not stories, and these are not you know projections of any sort. These are absolute hardcore facts, which even I was surprised to find out, especially this slide. I couldn't believe it myself when I thought that India has been the second best market globally to invest in, because we don't see such a big foreign flow compared to Europe or Japan, for example. But it's right up there in terms of returns to see. Right. So now that we've established, why one should consider India. If one has already considered India, then why increase allocation and have a reasonable allocation? And once you have decided that India makes sense, what are the types of options to invest in India? For which I mentioned active funds, right? So you've got to be diversified across all types of companies over all sectors. So how does one actually do it? What are the methods, or what are the execution options that you have today? So the first one is obviously the simpler, straightforward one. A lot of you might already have this, or you might be working with this. So the traditional route, if you don't have it already, NRE or NRO means these are the types of bank accounts that you're allowed to have in India as an NRI. NRE is obviously repatriable. NRO is not repatriable, which means you can't easily send money in and out of India. NRO has a limit under the LRS scheme, which is there's a limit to which how much you are allowed to send back money to the US. I think it's about $200,000 if I'm not wrong, or $250,000. I might be wrong. One of the two. NRE makes it free both ways, but every time that you transfer the money, obviously there's going to be a forex hit. The banks will put their own charge. Anytime that you're investing via Indian bank accounts also means that you have to file for income tax in India. While things are much simplified today compared to what it was 5 and 10 years ago, it still means that you have to, appoint somebody to do it for you, or do it yourself, or you need to know the process yourself. Which means going to the income tax website, filing for refunds, or claiming refunds if there are no other taxation, declaring your interest, and obviously it's global income, so you've got to declare all your other assets that you own in India, etc., etc. So it's a bit too tedious for most people, and a lot of you might not be traveling back home very often. If it's sporadic visits and visits which are very social in nature, where you might not have time for anything else, or you don't want to get into these complications at all, the traditional route might not be the best one for you unless you have somebody in India to help you. Or most people who have NRE NROs usually have a family member here who they trust with to help them with their basic transactions. But genuinely, it otherwise makes it a little complicated and difficult. It's nothing. It's nothing that one can't do. It's just time consuming, or it just takes effort. That's all. But whether it's worth it or not. But there are some challenges here. So, what are the other options to invest in India? So the newest one, the new kid on the block is Gift City. This Gift City is basically a place right outside Ahmedabad, which is like a special economic zone. It's actually very, very new. So a lot of things are still getting evolved in this regard. The great thing here is you do not need to have a PAN card or any such things that otherwise you need to invest in India. You can invest straight in from your US account in dollars and get your monies back in dollars. This eliminates the need of having any banking paperwork, income tax filing, nothing. So you don't need to do any of that. The only maybe entry barrier is that most funds that are available today in Gift City to invest in, the minimum investment is about $150,000 if and only if you are compliant with the net worth requirements. And currently the net worth requirements are as follows, that's mentioned here. You have to have a net worth of at least $1 million or a $200,000 income in the best of 2 or 3 years or something, if I'm not wrong. There is still some ambiguity here, which is why the asterisk is marked. And also, you need to have $5 million already invested. So, not everybody and anybody can just decide to invest through this route. Uh, I think a lot of US investors, the guys who are filing their income tax returns, or if you have global income, you need something called as a K1 report. Not every fund gives a K1 report here. I think eventually compliance will also catch up, and I'm sure we'll have the best of standards. But I think we are still in the evolution mode. Gift City is fairly new in general. It's only come in the rules and regulations were only set up 5 years back, but there were a lot of changes and updates to this which have happened. And I think the products which are available today have only been launched pretty much in the last year. But I think a lot more will come and a lot more clarity, a lot more variety of products, etc., will start coming in the next 2 years. So watch out for this space. I think this will be something very exciting for all types of investors to invest in India. And of course, this is not just for the US. Any investor anywhere across the world can access Gift City as an option. Uh, but I think just wait for certain rules and clarity of taxation to involve. And I'm even told that they are also going to start with the retail option where you can begin with as little as a $5,000 investment uh, for retail investors, but that's not come in yet. I think it's all in under discussions, and as and when the policy becomes clearer, they will make it a rule and they'll declare it, and then maybe it'll open up to you as an option. The third option, which is otherwise much more clearer and straightforward, is the FPI route. For FPI means foreign portfolio investment. This route is actually pretty old, in a way, kind of old. It's usually accessed by all the large investment houses, like your insurance companies, endowment fund, sovereign wealth funds, etc. Is usually restricted to those kind of funds where where there's a large amount of investment that comes in. Uh, until recently, where one of the funds that we know has gotten FPI permission, and they've kind of democratized it to individual investors. But things are much more simpler and clearer here because there's complete clarity in taxation. US and India, mind you, have a double tax avoidance treaty, so DTA, which means that whatever tax that you pay in India or the capital gains tax, you will get the credit of that in the US. And this is clearly mentioned in the K1, which is provided by this fund. So, at no point you're going to pay a double tax or anything like that. You do not have to deal with any Indian authorities for taxation. You don't need any broking accounts. You don't need any bank accounts. Nothing in India. You can be sitting in the US, just simply wire transfer the funds in, and whenever you want it by wire, you get the credit back into your account. So in both cases, in Gift City and in FPI, you can invest directly in USD. But obviously, always remember that indirectly you are still buying an INR asset. But at least you'll avoid all the bank charges and all the big forex markups that some banks charge, etc. So you are going to be safe from all of that. Typically, an FPI is domiciled in a tax haven, which means in a country where there is no capital gains tax, like a Mauritius or a British Virgin Island or something like that, and even Singapore in some cases. Uh, Again, it also depends on the nature of the fund, the origin of the funds, and all of that. So a lot of other complications are there, but through this FOF. FOF means a fund of fund account. Through a fund of fund method, you can invest into India via the FPI. The only benefit now in FPI, at least the way things are, is that one of the funds that we work with very closely accepts even smaller checks to kind of onboard investors who want to invest in India and also get the flavor of, like I said, an active fund where you have a small and a mid cap participation as well. But they kept the minimum investment to $100,000. So try to democratize it as much as they can because FPI also comes with its own cost of regulations and maintenance. So to make it a win-win situation for both, they've reduced the size uh, for as a minimum requirement for individual investors to if they want to invest in, and then there are no other uh, uh, site compliances or requirements like the net worth or the minimum investment elsewhere, which the Gift City has. So this is a straight $100,000 buy-in in a way. If you like India, if you like the product, uh, you know, this FPI route will be a straightforward one to consider to begin. So that's the other option. More details of the fund I can share offline if somebody is interested, but this is at least the third option now. And I think with that, I've pretty much covered most of my points. And uh, if I can, hold on, I don't think I'll have any more slides. Yeah. So I think net, just to give you some final data tidbits and something that you gets you excited for it to consider India as an investment destination. Uh, I was mentioning I remember about electronics and semiconductors, the industry where we were almost negligibly present in. So, especially in the last 3 years in particular, India has actually started under the new laws that the government has given and under the incentives that they've given to people to set up shop in India to start manufacturing. Electronics has actually been taken up by the government. So this is something called as a PLI incentive, production linked incentive, which is what the government of India has given since 3 years now. This is in the making, and electronics has been the number one priority. That entire sector, because ultimately this is also a sector which creates a lot of jobs in the end. So right from your and one of the largest electronics or largest items of Indian imports and something which are something that we kind of impacts us because our current account deficit, which gets impacted because of India's purchases was mobile phones. We were never good at it. We've always been purchasing mobile phones. And imagine a country with a population of 145 crores, you have at least 100 crores odd mobile phones, right? If you exclude the very elderly and the children and all that. But there's just no way to purchase this phone. So uh, they've actually incentivized. So for somebody like an Apple, for example, to say that, by 2027, we'll have 65 million iPhones being made in India. And of course, with what happened with the trade war and the whole economic war that is being going on with China, which I think will last a long, long time. I think there'll be more and more such projects used to get announced. I think one of the largest projects right now by Foxconn, which is just out of Bangalore, I think it's going to start production in June. And this will employ about 12,000 people, if I'm not wrong, give or take. So all these things have a big economic impact, right? 12,000 people going to work, especially women. There's a fair majority of women which are employed by them. Uh, so things like that. So even Samsung, for example, has been looking for space right now outside of Chennai to set up their shop for electronics, particularly for mobile phone and assembly and manufacturing. And they want to actually diversify out of Vietnam. Vietnam is actually the place where they have the largest uh, facility outside South Korea, but they are also now looking here. So I'm sure, and I think India is also the place where it can't be ignored anymore. Right? It's a large population going towards affordable and affording or aspirational population which wants a better phone or better lifestyle. So despite a large population being relatively poor or living hand to mouth, you still have a big population which is about 50 odd crores, and that number is just bludgeoning because the lower middle class and the middle class just gets bigger and bigger. And with more and more incomes and more hands in the family, there is much more aspiration as incomes grow to have a better lifestyle. So I think Tata Electronics, for example, they're actually another one of the other partners for Apple. They're trying to set up shop, and they already have a facility, but they want one more that they are trying to set up. So this is as far as only mobile phone. It's a very small part of the overall electronics basket, but it's one of the biggest contributors. I think. I think you would have heard about Tesla, which is setting up shop in BKC in Bombay, one of their first uh, showrooms here. And they're obviously again, once you have an assembly here, showroom here, currently the cars will start getting fully imported, but then you start with an assembly line. They're in discussion with Micron and Tata Electronics again for the supplies for their chips for their cars. Whether or not they'll be successful, I don't know. But this at least kickstarts things into motion. TSMC, Taiwan Semiconductor Manufacturing, the largest and the most prestigious uh, manufacturing company for semiconductors, for particularly the high-end semiconductors. They have, I think, I'm sure you probably it's covered by the press. They met the PMO and the PM to set up shop and all of that. So I think big things coming there. One of the bigger beneficiaries, and I think in the aftermath of however this trade war, whatever that ends up happening, as and when the final decisions are taken, because the decisions keep changing so much. But the bigger beneficiary, I think, in the whole mess of all of this would probably be India, I feel. For example, in textiles, right? Uh, I think people are already talking about moving orders from China to India, about to the tune of so there's an early estimation that people have said that 10 to 15% of these orders for these large apparel makers and textile manufacturers will probably move to India because uh, one thing is, let me be very clear that I don't think we match China in cost. I think that's a game lost because nobody matches their volumes and their costs. But in terms of diversifying your supply chain and to get a guaranteed delivery of your product, a 90-day delivery, which is what a most textile apparel manufacturer wants, is something that India can comfortably give, even if the cost is 20% or 25% higher. And I think people are also looking for certainty and not just for cost cutting, which is what the discussions have been, and which is what I've come to understand as to what's been going on when it comes of global trade. I think that's the one thing to look out for. I think BYD, the largest electric vehicle seller now in the world, probably has a very small. I don't think it's present in the US, but if you have time, just check out just YouTube BYD factory in China, and you will see it's a whole mega city that they've developed, and they've been coming out with amazing technology on in the electric car front. Something that we've seen in James Bond movies and all that. Right? It's just amazing to see what they're trying to do. They've actually seek for in government of India permission to set up shop over here. VinFast, which is the other Vietnamese electric manufacturing, it's already starting its production in July 2025. So these are again not just stories, yes, hone wala hai, wo hone wala hai. These are actually things which are put into motion. They're obviously at different stages of development, but I think great things and big things are coming up. And with this also comes a great promise of meaningful employment at the end of the day. So I think
Yeah.
so.
Yeah.
I think big things
Super.
coming for India.
Great. Thanks a lot, Rushil. And before we take questions, can I just request everyone who can please, if you can switch on your video and come on screen for a group photo. And then there are a couple of questions on the chat also that we can start with. So if everyone who can please, in 10 seconds, maybe we'll take a group photo. But Rushil, this was very helpful while everyone comes on video. Super detailed data points and presentation. Thanks a lot for putting this together. Okay, so Dimple, are you ready for the photo? Can you stop sharing also, Rushil, once, please? Okay.
Yeah, done.
Great. Thank you. Okay, so maybe in 5 seconds. 5, 4, 3, 2, 1.
Yeah. I'll...
Oh, okay, one more. Sorry. Dimple, are you taking one more?
Yeah, I can take one more. Ready?
Ready. 3, 2, 1.
Thank you, everybody.
Thank you, everyone. And okay, so Rushil, I think there are a couple of questions on the chat. So what options are there for who
Yeah,
can't invest minimum of... Yeah, okay, please go ahead.
Right. So Forum has asked this question. Forum, so I think the one option that you have is uh, the only option rather that you can have is if you can't do 100,000 right away, you'll have to open an NRE or NRO account the traditional way and start off from there. We ourselves had a few investors who have already done this for a while because they have some running incomes in India, some rental and all of that coming through. But in any case, that remains an option that you can explore. I think that's the only thing that you can do at the moment to participate in the Indian equities. Of course, that also comes with the whole paperwork, KYC, etc. So, but I'm not going into all that detail. But yeah, I think the simple answer is that the traditional method is the only method at the moment.
There's one more question by Rahul about which
Yeah.
financial.
So financial services and wealth. So Wealthfront, I think, is
Can you
the
repeat, Roshil, can you repeat the question because not everybody is seeing the question?
yeah. So Rahul's question is, what financial services like Wealthfront in the US are recommended in India? So to the best of my knowledge, I'm Rahul. If you can correct me if I'm wrong, but I think Wealthfront is a DIY online platform which gives curated portfolios where you fill in your basically a simple risk profile and it throws up recommendations. A, B, C, and you pick your option, something like that. Uh, so maybe something similar in India, like to like, maybe not exactly like to like, but there are a lot of websites now like Grow or Zerodha or something like that, which offer such things. I've never used them myself, so I cannot comment on how useful or not they are. But I think what I do know that it's become very, very democratized and very easy to start off. The only hitch here is all these websites do not accept so well they are very seamless and completely digital onboarding. It's not the case for NRIs. For NRIs, it has to be unfortunately the paperwork way. Uh, and so that's the only challenge that they have. And there are while they might give you curated options, I think Small Case is another website which has curated portfolios. But I think it's specific to equity and it's specific to sectors or market cap side of investing. So I think that's the only challenge in that. So there's no active advice there, perhaps, uh, at least not customized advice, if I can add that. I think that's something that you've got to uh, otherwise explore it yourself. But yeah, these are some of the platforms I think which are out there. Funds India is also one. So, but some have only mutual funds, some might do ETF, mutual fund shares, some might do everything, bonds and all of that as well. So you can maybe see some of these if you want, and then take a call, or you speak to some wealth advisor of your choice. So yeah, so one more question is,
That helps. Thank you.
if there's an NRI investor association that can take concerns of NRI to finance minister. I mean, I wish there is, and I hope there is somebody who's giving feedback. I'm sure there is a feedback loop at the end of the day. But I think at least to give you all a heads up, they've become extremely strict in terms of even for us as resident Indians, because I think under the PMLA Act, which is which was passed by the Finance Ministry. So basically, it is the whole idea was to Prevention of Money Laundering Act is what it is called. Uh, even simple things like your Aadhaar name. If I am Rushil Narendra Dedia and my PAN card says Narendra Dedia Rushil, that is also not allowed. It has to be exactly the way it is. So all these new norms have now kicked in so that they can establish the legitimacy of an entity and all that. So I think that's also that's translated back even for NRIs where they validate your email ID as well at the end of the day, even your mobile number if you have one in India. So I think there've been certain feedback which has gone to reduce over compliance in terms of KYC, because I'm sure or some of you have these horror stories of having continuous paperwork. I remember Mahendra uncle telling me last time when he was on his India trip, he had to make these trips to the bank and keep filling out forms and signing papers and all that. But unfortunately, under this PMLA, they've become extremely strict and no bank wants to take on the liability. So unfortunately, people are facing the brunt of it. So they've tried to relax it, I think. To NRIs, they've given a leeway of another 15 months to comply with it and all that. But Other than that, I'm sure they take feedback, but again, it may be something that you and I will not know as to what happens on a regular basis. The next question by Leena Bain is going through Demat account an option for NRI? So Leena Bain, yes, if you want to invest directly into stocks or have a PMS, you will need a Demat account if you go through the traditional route, which is through your NRI or NRO. If you're coming in through Gift City or if you're coming in through FPI, you don't need any of this. You don't need any broking account, no Demat account, no bank account, nothing. In India, you can directly remit money from the US and you will get it back in your US bank account. Is investing in Indian real estate an option, a viable option, and mutual fund? So Indian real estate, oh, I mean, very, very complicated, very, very difficult to. So, I mean, if you mean real estate via a fund, there are few funds under Gift City, I think, which have registered where you can invest in via a real estate fund. So that's something you'll have to think about and consider individually. There are real estate funds for all of us here as Indian residents. Genuinely, I've not seen anyone being anything, being any worth consideration. I feel that is so far. Maybe things will change later on. But I think because they also come in with the 7-year lock-in, then they have an extendable period of 2 years, and real estate is also a illiquid asset. So when you want to exit partially or fully, it's very hard, and the returns have not been particularly great as a whole bunch. Again, I might not be aware of all the products, so that's the disclaimer there. But I think uh, so that's the only thing. And if you went real estate directly into physical property, that obviously one can anyway do. But there is nothing via all the options that I mentioned. Then you have to have your NRO NRI in place and go via the traditional route and file income tax and all that. And mutual funds, of course, you can invest in. So mutual funds, I think a lot of the funds do not accept money from US investors because of the complication of taxation that has put in for NAV-based products. Only a handful of them, I think only 3 of them take in money digitally, and only another further 3 or 4 take it physically, provided you're present physically in India, which means not just to invest, also to redeem your money, you have to be in India by law. So that's a bit complicated to invest directly in mutual funds, but I think one can put into mutual funds now via Gift City. So there's a fund of fund option, which basically means from the US fund, you can invest into the Indian mutual fund through the Gift City route. But again, not all funds. I think only HDFC has started it and Mira has started it, but only a handful of their products, not all their products. So we have the list of that. So if you have any other questions on that specifically, you can connect with me offline. I'm happy to help you out with that. So, which I think I've already covered Mukesh Bhai's question, NRI, NRO. So yes, traditional route is always open. It's always been open. Frustrating experience with HDFC KYC. Sir, welcome to the club. You're not alone. Don't worry. Many, many like you out here. And I think it's also to do with your RMs, whoever it is. I think a lot of times they are not incentivized to help you. So they might not do it. But I think there are individual guys who do go out of your way. Also, if you have your if your family member in India or they have strong banking connections, then they can get it done for you. I think I would suggest that's the way you try and twist them to getting your work done as well. But yeah, it's very, very frustrating. I couldn't agree more. And not just for you, even for resident Indians. So forget about you. I'm sure there are other difficulties that you have because you don't live here. What is the difference between using funds in India and sending funds from US in terms of paperwork? So one is the lot of the paperwork, which means if you're sending money into India or sending out of India, there is going to be either LRS through NRO. If you're doing it through NRE, you have an online platform. But in both cases, there is a forex fee that you have to bear by the bank. And therefore, typically most banks also give a markup on so if the dollar is 84 half, they'll charge you 86, something like that. So there's also a markup like that. So I think that's another problem. So rather than that, and the reason I think people that should consider the FPI route or the Gift City route now, and I'm sure Gift City will evolve, is that it eliminates all this need of going online, transferring money via, doing your repatriation and paying fee and all of that. Because it's not just paying the fee one time, because once the money comes into India, hits your Indian bank account, means that you also have to file income tax. Or because whenever you invest money in India and you remove money, a TDS is applicable. which is tax deduction at source. In India, deducts a 20% tax of your amount, of your total amount that you are supposed to receive. And to get that amount back, you have to file for a refund, which also means that if you can't do it, you have to pay an accountant to do it. So there are these add-on costs and basically steps that you have to follow. If you're comfortable with it, of course, go ahead. If you have a running income in India or something like that. But for most people, I think the other two options are much better suited.
Amazing. Great, Rushil. Thanks a lot. I know we have a couple of more questions, but maybe we can, anyone who wants to understand further about Rushil's work and his fund, etc., you can reach out offline. We are already over time. So with that, I think we'll close today's session. Again, thanks a lot, Rushil. Thank you, Mahendra uncle, for the introduction.
Thank you, Rushil.
Okay, my pleasure. I've left my email ID in case you guys want to reach out. Feel free. And otherwise, Priyanka has my other details. So please.
Yeah. Amazing. And thank you everyone else for attending. And we'll continue with these KOJAIN virtual series. Have a nice one.
Thank you.
Bye.
Thank you, Priya.
Thank you. Bye.
Thank you.
Thank you.
Thank you.